I'm Dr. B, and yes, I'm a real ER doctor. So you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse. Welcome to the Market Pulse. I'm Dr. B here at Verified Investing. Today we're going to be getting into the nitty-gritty details of technical analysis. We're going to be discussing the RSI. This is something that I use every day in my trading as well as long-term investing. So let's get over to the charts. Okay, so the Relative Strength Index, or the RSI, it basically tells us if we're overbought or oversold. In general, overbought is greater than 70 on the RSI, and oversold is less than 30. Now, some say over 80 or less than 20. It just depends on your trading style and what you feel comfortable with. So let's take a look at the charts here, okay? This is the S&P 500, and you can see here the RSI is in yellow. This is the price action. Here's the RSI in yellow, and you can see these dotted lines. This is the 70, okay? And this is the 30. So in general, when the RSI is very low, it's time to buy, and when it's very high, it's time to sell. But it's not quite that simple. So as you can see here, this is the bottom of the COVID lows right here, and you can't quite see the entire price action, but you can see how low the RSI got to, well below 30. And you can see the post-COVID run all the way up, and you can see the price here was around 470, 480, and you can see the RSI was clearly over 70 there. So in general, we're looking for overbought, oversold conditions. Here's the 2022 lows, and you can see that the RSI actually was right around here. But there's actually something else that can tell us and really talk to us on the charts about a reversal pattern, right? And what that's called is divergences. We're going to look at that in the next couple slides here, but we're going to move on and just show you another chart on Google and the same exact price action here, right? So you have a big run in the markets, right? Big run in the markets, a big dip, and the same idea. Here is the COVID drop. There's the COVID lows with the RSI. Right at 30, bounced right at 30. The price action came up, and the RSI got above 70 here, and you started to see a sell-off, and then again all the way over into here with the lows, and you see the price action was low while the RSI was low, right around 30, and that's where you started to see a bounce in the stock. All right, so we're going to look at a couple other things here. So reversal signs. So we've talked about the 70 and the 30, overbought on the 70, oversold on the 30. So what is bullish divergence and what is bearish divergence? In general, bullish divergence is when the chart or the stock price has fallen and there's a divergence between a falling stock price and a rising RSI. Okay? Bearish divergence is when you have a rising stock price and a falling RSI. In general, that's basically how it works. And so we're going to go on here and look at a couple charts. We're going to start on bullish divergence, and we're going to talk about what we see here on the chart. So this is the S&P on the weekly chart. We can see this was the previous all-time highs on the spiders. The market started to come down, and we're looking for the RSI, again, to be around 30, and then we're starting to look for divergences, right? So in general, this is a divergence. The price is sloping down while the RSI is sloping up. That's key. Whenever the slopes are different, that tells us that there's a divergence in price and RSI, and typically what that gives us a hint to is that there's larger money or institutional buyers, smarter money, starting to buy here at the lows, and that marked the reversal, okay? That marked the reversal. Very, very incredible when you start to see this work out time and time again on multiple charts. Okay, so we're going to go over to Google, Same type of situation happened here. You can see that the price was coming down, price was coming down. I drew a little line in here so you could see the slope, but you can see the slope of the price action was down. It was a negative slope, whereas the RSI had a positive upsloping slope, right? So that gives you a hint to say, all right, there's likely a reversal in the stock price that's going to occur. And look at this. Right after that RSI triggered us to say, hey, there's bullish divergence here. That's when the market's ripped higher. And this also correlated with the lows on the S&P 500. So what you can do is you can time or do your best. You're really never going to get the highs or the lows. If you do, you're probably just lucky. But you can time the S&P lows with the lows on the stock charts, on other equities, for example, and then you can find similar setups. So let's say that the S&P had bullish divergence while Google had bullish divergence. That's a great time to start loading longs into the markets. Okay, so this is the Nvidia chart. This is the 10-minute chart. And again, this works on all time frames, right? It works on the weekly, daily, 10-minute chart, 1-hour chart, 1-minute chart. So you can see here that the price is coming down, right? The price is coming down and the RSI is coming up. So that tells you that there's a reversal likely coming, and look at the reversal, right? And so you could look at so many different charts and see this. Actually, I see another divergence right here. So the price is angling down while the RSI is slightly angling up, right? So downsloping price, upsloping RSI, and there's your reversal in price. All right, so we're going to talk about another chart here. This is the Microsoft 10-minute chart. And once you study this, these patterns pop out to you, on the screen very clearly. Here's a downsloping price, and here's your upsloping RSI, and here's your move upwards in price. So over time, you have to train your eye and look at, enough charts to see how this works. In general, for bullish divergence, the line is going below the price action and below the RSI or the indicator. You can also have divergence on the MACD, stochastic RSI, things like that. That'll be in another show. But in general, bullish divergence, the line goes at the bottom. Bearish, the line goes at the top. All right, so we're going to talk about bearish divergence now. So this is Apple, the weekly chart on Apple, and we're going to look for bearish divergence. You can see the price was coming up here. So you had an upsloping trend line. Notice we're drawing the line on the top of the price. We're looking for a reversal. And here is a negative slope. So positive slope on price, negative slope on RSI, and you can see the drop here. This is almost a 20% drop in Apple. And there's probably other divergences scattered throughout the chart, both bullish and bearish. Very good. So let's go back to another chart here, and let's look at the daily chart on the NASDAQ. Okay, so this is the previous all-time high from the end of 2022. And I'm going to show you how I started to look at this chart and say, there's probably a reversal coming, right? And this is why. Notice this price had an upsloping trend line, right? But look at the divergence on the RSI. This told us that big money was likely selling, okay? And look at the ensuing fall. Major bear market after this reversal on the RSI. So just go look at your charts and you will find over and over again that this occurs on the charts on every time frame. It's pretty amazing. Pretty amazing. We're going to take a look at a couple others here. All right, so we're going to look at the target 1-hour chart here, and we can see the price is moving up while the RSI is moving down. This is telling us that there's likely a pullback coming, and you can see this pullback. And again, this isn't that large of a pullback because we are on the 1-hour chart, compared to the daily or the weekly chart. But again, that just shows you, hey, there's likely a pullback coming. It gives you a hint to tell you, be careful, probably not a good time to buy, right? Probably better to short, okay, or sell. And so we can look at this same type of pattern even on the smaller time frames. This is the 1 minute chart on Meta, and hopefully you can see this. You can see this already, right? Price is going up, and RSI is going down, and that's bearish divergence. That's telling you there's likely going to be a sell-off. And look at the sell-off on Meta from right around 524 all the way down to 505, 506. So pretty incredible. And when you start to learn this, you can apply it in your investing. All right, so this is the Meta 1 minute chart. You can probably already see here, after looking at the different charts here during the show, here's the upsloping price with downsloping RSI, and you can see the major reversal that came after that, somewhere from about 524 all the way down to 506 area. And so very, very important to start to look at this when you're trading, investing for the long run, and it'll help you stay out of trouble over time. I hope you enjoyed that episode. That was the RSI episode. Before, we talked about Fibonacci levels, trend lines, the Wyckoff market cycle. If you've been watching over the past several weeks, you can see how all of this comes together, and you start to understand why the market bounces at certain levels, why it pulls back at certain levels, and it's very empowering when you really put it all together. Like, it's really like a puzzle. The markets are like a puzzle, but it can be understood much better via technical analysis. So I hope you enjoyed. I'll see you next time. Take care.